Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh Lilquist, and we are having a good time here today in studio talking about the different do's and the different don'ts of the financial markets. Some of the good news, some of the bad news that's going out there. But you know what? It all doesn't matter because what's on a price chart, that is factual. That does not lie. That's how we make our investing and trading decisions. And we're going to elaborate a little bit more about how that works here, probably in this third and fourth segment here. But we did have a lot of people texting in for that investing class. Congratulations to those of you that did that. If you did miss seats for that free investing class that we do locally here in Bloomington, it's a hands-on class here locally. You can text the word investing to the number 210-210 for 2 seats for that class. When you do that, you're going to receive a text back. There is going to be a link in there with our landing page so you can pick your own date. We do these classes during the week. We also have these on the weekends. So when you text in investing, you're going to get a text right away. It's going to be investing and trading live. There's going to be a link in there having you click that link and picking class here in Bloomington. And as we were talking about in that last segment, there's a lot of indecision out there. The S&P has been sideways, range bound. The NASDAQ is actually showing a little bit of strength. The Dow has been showing a little bit of weakness. And you were talking about some of the different stocks, the market breadth, BREDTH. And a lot of those, I guess, some of the few stocks that are actually driving in the market, Apple was one of them, up almost near the highs of where it was back a few years back. Meta up 180% roughly from the lows that it hit. So there's a lot of indecision out there with different stocks, and it's not a bad thing though, because when there's indecision, there still is opportunity. We talk a lot about different OTA picks here, one of the services that Online Trading Academy has, and these are different trading opportunities that allow people to kind of see supply and demand on a price chart and then be able to make an educated decision if it's a potential opportunity or not for them. And we have Qualcomm kind of leading into our bad news. It's actually a potential shorting opportunity around the 114, 116 area roughly. We talk about zones. There's not an exact price, which is perfect because then you don't have to be exactly right. So it's an opportunity for a shorting opportunity. And that's profiting. It's a strategy to profit as markets go down. So these strategies, when we talk about, you have obviously strategies when the market goes up, strategies when the market goes down. So you don't really matter or care about what's new, what the news is saying, what, some of the bad things with the debt ceiling that I know you're going to talk about here, but just different opportunities in different directions. So, Al, I want you to elaborate a little bit more about some of the great opportunities that come along with the bad talk that's happening.
Right. Well, there's a lot of things out there. We would be remiss if we didn't mention that there are things that are catalysts that could be very negative for this market. And it's not just us saying that. We've got people that are, analysts for big companies, J.P. Morgan, some of the hedge fund managers, and they're talking, about some potentially very serious impacts to the market. But here's the bottom line is this, right? Bad news is only bad if you don't know how to take advantage of it. All news, good or bad, results in opportunities, and the opportunities don't just work in one direction. Josh mentioned shorting. Well, that's a way to benefit when the price of something goes down. All those companies that we mentioned, Apple, Meta, NVIDIA, all those big companies, the top 10 companies in the S&P 500 are responsible for 90% of its movement, which means that there's 490 companies that are probably lagging in that index.
You mentioned NVIDIA, Al. NVIDIA is actually at the all-time highs
Right,
now.
but that was recent because when the tech stocks had a pullback,
Mirror it.
right, all of those companies had a big move down. So a lot of the move up now is just recouping what was lost before. But if you knew how to be selective, if you knew how to take advantage of movements, not just one direction, not just in an up market, but in a down market, in a sideways market, and there are opportunities in all of them. If you could be selective, and let's just say that you honed in on maybe the top 5 or 10 stocks instead of the whole index, the results that you could have had could have been substantial. So the market is always go one direction. In fact, sometimes when it is in a trend, a downward trend, we have some of the biggest 1 day or 2 day up moves that we ever have. And the same thing happens when we're in an uptrend. So understanding how to keep this simple, and really that's what we do. We really break down trading into its simplest components. And that's what all the professional traders do. And what the components are is the proper price to enter, the proper exit price if you're wrong, and the proper exit price if you're right. And I think the two biggest mistakes that the retail traders make is, one, not knowing how to manage risk. And if you could interview all of the big famous traders over the years, they will tell you the number one thing that they're concerned about is losing, how not to lose. That's what they concentrate on. The winning trades will come, but you have to be able to manage risk before that. And then the second thing is, people have been conditioned to trade time, not price. And what I mean by that is that the Wall Street firms, the financial advisors out there, have their kind of go-to is that buy and hold strategy, which is a time strategy. You hold on for decades. You put a portfolio together. You don't worry about the drawdowns, the crashes, the corrections. You just hold on instead of trading price, which means when you have a profit, take the profit. That's something that should be in your portfolio. The problem with holding on for these long periods of time is you'll see a profit come and then it goes. Then maybe a profit comes back and then it goes. If you learn how to identify the proper area on a price chart where you should take a target, you can benefit from that. And this is an example. And this, I'm not saying that you're going to be able to achieve this, but let's just say that you were using an asset that allowed you to generate 12% per trade, and you did that 10 times per year. You know what the annual return would be? It's 310%. And again, I'm not saying that you're going to get that, but I just want to point out the fact that if you were able to take profits when they appear, when they are in your favor, then you have a much better chance of having a portfolio that's more attractive.
Yeah, I like how you brought that up. I mean, that's just some of the opportunities that people don't even know about. And you're talking about the price to get in, the price to get out, and where you find that is on a price chart.
Correct.
It's not just a guess. It's not a, hey, I'm going to buy it at X dollars. There's actually an area, we call them zones, institutional buyers or sellers that we want to follow and trade like, and that's what we identify on a price chart. And people are probably listening right now and saying, oh, how am I supposed to do that? Well, it's just learning the right skills and techniques to do that. And I'm really glad that you brought up, it's a lot of people are trading as time. It kind of made me think about when I was on a flight not long ago. We were talking about stock trading, and I hate talking about trading on a flight because they always talk about, oh, what are you going to do with this stock, and what are you going to do with that stock? And they kept saying, well, how long are you going to hold this stock? I forget what the stock it was, but they kept saying, how long? I don't know. What I would do is just look at a price chart, and the price chart will tell me. So that way, there's no emotions, there's no guesswork. You keep it simple, as Al was talking about. What's that term? Keep it simple, smarty. Is that what they
That's
like to
what
call it?
we do it that way.
So it's just having the right skills and techniques to do that. And we have these investing classes here locally where we talk about those skills, those different techniques and concepts to make those smarter investing and trading decisions. Now, these trading and investing decisions can be in a regular trading account or in an IRA. Maybe even in a 401k. A lot of people have more access to their 401ks than they think. So it's just, what is your goal in the market? If you have some sort of goal, how do you achieve that goal? And you got to have a plan to do that. Where you start is Online Trading Academy. We have these classes. I want to invite you to one of these classes. We have these during the week. We also have them on the weekend. So if you want to text the word investing to the number 210-210 for 2 seats for this class, when you text in, you're going to receive a text right back saying who it's from, so being from Investing and Trading Live. You will also have a link on there with our landing page. You click that link, that's the page to get set up with the date that works best for you. So text the word investing to the number 210-210 for 2 seats for that investing class. So Al, you mentioned something pretty interesting about, I don't want to talk about rates of return because everybody's going to have different rates of
Sure.
return, but that's really dictated off the strategy that you want to do. And to be able to do that, you got to use a little bit of OPM, other people's money, right?
Right.
So talk a little bit about a different asset that other than stocks, the stocks are great, but there are other assets that might allow people to have better opportunities with less capital.
Exactly. We call them leveraged assets. That's basically using other people's money where a small account can control something much bigger. The leveraged assets that our students use are the foreign exchange market. We call that the Forex market, the futures market, the options market. All three have really good leverage, which means a lot of people that don't have big portfolios can still participate in something that is worth much more than they have in their account. And here's a great example. When we talk about the currency market, the foreign exchange market, you can also trade currencies and futures. Last year, one of the more famous bankers in the world is Jamie Dimon, head of J.P. Morgan. And last year, and this appeared in several different articles, Jamie Dimon said, "Brace yourself." He warned about an economic hurricane. While he was talking about that and how bad things were going to become in the economy, his traders, his people were making record profits trading currencies. The same thing with Bank of America. They had an entire quarter, that's 3 months, without a single losing day trading in the currency market. Now, but here's the thing. These big banks, these institutions that are doing that, believe that you're not cut out for that market. You're not smart enough to be able to do that, and you should just put together a portfolio of stocks or mutual funds and hold on for the long time. And there's no reason that we should just let them participate in these markets and benefit. You can do the same thing. You can trade in the foreign exchange market. You can trade in that, trade that in your self-directed IRAs or in a regular investment portfolio. You can trade options in your self-directed IRA. You can trade the futures market. All three of these have great benefits. We talk about these in the class, and they also allow you to participate in different directions in the market. So you want to be a multi-directional trader investor, not just a one-direction trader, because if you do that, you're really missing out on probably 40 to 50% of the opportunities that you might have to benefit from what the market provides. Don't be afraid because I don't know anything about the Forex market. I don't know anything about futures. I don't know anything about other things. That's what Wall Street wants you to believe because they don't want you to know how to do these things. You won't need them if you do. But if you want to take advantage of these opportunities, whether it's based on good news or bad news, these are the assets you want to. And we show you how to do that. Again, keep it simple because regardless of which asset you are trading and whether you are doing this short term or more long term, you use the same process. We have a core strategy, investment strategy, which does that. It just concentrates on price action because that is the most important thing. If you buy something, you want the price to go up. If you sell something, you want the price to go down. What causes price to move up and what causes it to move down? Our core strategy shows you how to identify that on a price chart. It's basically just following what the people with billions or trillions of dollars are doing.
Yeah, and you're just kind of talking there, and I was kind of thinking about just think about this for a second. Just imagine if there was a TV show about construction workers, or if there was a TV show about accountants, or if there was a TV show about engineers, or if there's a TV show about nurses, and they all said, you can't go be a nurse. You can't be a construction worker. Trust somebody else to do that work. You can't be an accountant. Trust somebody else. You can't be an engineer. Trust somebody else. We would have nothing in this world, right?
Correct.
And what's happening is TV has conditioned people to think they can't do something. And it's just a different skill, a different strategy. If you were any one of those professions, you had to learn that skill and you did it, right? And it's you seeked out some sort of education for that. And that's why at Online Trading Academy, we have education on that. It's just something, it's not new. It's just a little bit different. So these classes, they're about 2 hours long that we host here at Online Trading Academy in Bloomington. By the way, we're a local facility. We have a state-of-the-art facility with a few different classrooms. And in these classes, we teach different skills and strategies to make smarter investing decisions. So text right now to the number 210-210. Text investing to the number 210-210. And that's for 2 seats for this investing class. When you do that, you're also going to receive a financial quick start kit, which will help you get started right away. So text the word investing to the number 210-210. You'll receive a link to pick your own date. Coming up next, some more retirement strategies.